One is spot price. So what is spot price? The price at which the asset is trading in the cash market. And what is future price? It is the price of the futures contract in the future market. Yeah. So currently we are in the month of August. Yeah. So there are 3 months for which you have contracts going on, which is September, August, September, and October. Each of these contracts expire on the last Thursday of the month. The last Thursday of the month. Yeah. So tell me, what is the last Thursday? What is the date for last Thursday of August? Yes, Hemant, you're right. It's only unlisted shares which are done. So that is kind of that's not even a forward transaction, because people, okay, we negotiate and we do it immediately. So they are not typical forward, but definitely they are off the exchange. Yeah, because they are not listed on the stock market. So you're right. 26th August is the last Thursday of August. So what happens is all August futures will expire on that date. Yeah. Now, what do you mean by expire? They will not have any validity after 26th August. So the moment, coming back to what we were doing here, which is on 26th August, the August futures cease to exist. So what happens is the exchange will introduce the November futures. Yeah. Now the September futures will expire on the last Thursday of September, which is the last Thursday of September. Absolutely right. 30th. Yeah. So on 30th September futures will expire and the exchange will introduce the December futures. Yeah, this is how it works. So let me take you back to the PPT. Here I've just given an example for 15 July. You have 3 months contract, the near month, that is the running month, and the next month and the far month, each expiring on the last Thursday. If the last Thursday is a holiday, what happens is you will have expiry happening one day earlier. Yeah, one day earlier. Okay, so have a look at this. This is a snapshot of from the NSE website. Yeah, so if you see here, just let me just be sure. Yeah, so this is index futures. That means they are derivatives based on index, which is the index here. Nifty is the index. These were taken on 1st July. Yeah, so at that point of time, you had 3 months series working, July, August, and September, with their expiry dates written here. Yeah, the value of the Nifty when this snapshot was taken was 15,683. So Nifty is the underlying here, and each of these contracts, I mean these future series, this was their open price for that date, high price, low price, previous close, and last traded price. I would like you to have a look at the volume of transactions. So if you see, the volume of transactions is highest in the running month, and it goes down drastically for the months that are far away. Yeah.